Welcome traders, so I'm recording this for Monday the 21st of August, and let's just have a look at the economic calendar news that is scheduled for the week ahead. A lot of flash PMI data, which is essentially preliminary PMI data, so we'll see how that goes. It's not too important at this stage, I don't really think so. However, I did hear kind of via the rumor mill that the Netherlands has gone into a second quarter of contraction, which is technically a recession. It's a terrible definition, but that's the one they use. And so having a look here, one of the things I'll really be focusing on is the US unemployment claims. Just having a look at that, the market is so hyper concerned that there's going to be the biggest recession we've ever seen. This is the kind of stuff that gets touted, and the first clues will be in things like the unemployment claims going up and a few other things. Okay, then we've also got the Jackson Hole Symposium, so this will be coming out of the US, and we've also got the business climate out of Germany, Euro. So these are things on the tail end of the week that are likely potentially to cause a little bit more disruption and volatility in the markets. Okay, so just being prepared for those and making sure we've got our risk management plans in place. And that being said, let's go across to the charts and have a look at what's going on there. Okay, starting off with the VIX. The VIX has climbed up a little bit here, and again, context is very important. We are still sitting at lows. Okay, so when I say it's climbed a bit, there's no reason to start panicking. It's really when it starts to hitting up, say, 40 and beyond, where we are likely to be in some form of a market reaction, such as a COVID, when COVID first hit, or when there's some sort of global market crisis. We're not there. We're in a range that we tend to ping pong around. I'm just highlighting that it has started to climb a little bit, and we'll keep an eye on that. Okay, so we'll not even be really concerned until we start to breach 30, and we'll see the speed at which that might happen. That could take years, it could take months, who knows. We'll see what's going to happen there. Looking at the dollar, so tiny little thing here, but I noticed the dollar has managed to breach this downward trend line, which hints that if it continues through this, it's now becoming more bullish than bearish. If you look at it on a weekly, it looks a lot more obvious there. And overall, it's looking relatively bullish. But if we look at it from a monthly perspective, it looks as though it's found some nice support here. Let me just add in a few lines here quickly. Okay, so really just right now I would consider this range bound, and so it has that potential to head up towards the highs. We've got generally structured lower highs, lower lows. It could still reverse where it is now, but it has started to peak through that, and so the question is, will it be able to continue up on that? So this week, aside from normal retracements, my expectation is this is going to attempt to potentially push up to 104, which means that the euro dollar should also continue down towards this 10800, 108.19 level that I have here, back down towards these lows here potentially. We'll see if it's going to do that. It's also failing at this area where it is, so showing a little bit of exhaustion around about that 1.1025 level. So that's a big battle. So the question this week is, will there be enough of a volatility from any of that stuff to break through any of these levels, change the direction, set the direction? So when we look, for example, at sterling, it's actually a little bit stronger. It's holding at support, and therefore we might find that sterling, which is range bound at the moment, picks a direction, breaks to the downside or to the upside. And what makes that important then is looking at the weekly candles, so break above or below the previous week's high or low. Again, you can see now Aussie dollar is very much overextended to the downside. So unless we have something unusual where that dollar does really continue, I would expect at least some part of this week to see it retrace, so get a weaker dollar, see the Aussie dollar at least start to strengthen. The same would actually apply to the Kiwi dollar. I'd like to see that retrace back up to that 0.600 level. So day traders will have some opportunities for this if that is the case. They'll have some buying opportunities, shorter term opportunities until we get up towards that level, and then swing traders will potentially take over if that trend maintains. So again here, dollar yen, I like this. We're pulling back into these old highs here. Any kind of a pullback into 144.45, 50, or even down as far as below that 143.50 area could find some good swing trading opportunities to get back in on that trend. Dollar Swissy looking more and more bullish. To me, this looks as though this does want to keep going. It's outside of this range now, so I can remove that, and while we're at it, we can remove this, clean it up a little bit. But yeah, looking for this to push up a little bit higher, possibly retrace after that, but at least initial push. Again, dollar CAD very, very much overextended. Even here within that sort of monthly, there's a little bit more of a bull flag. This looks more and more bullish. There's a very, very subtle curve here. It's starting to look like it wants to continue higher, and that would also hint potentially at a stronger dollar. So there's a mixed bag here, but leaning a little bit more towards a stronger dollar this coming week. And so again, if we have a look at the other pairs, the ones I really like the look of again will be the yen pairs. They're still sitting on my watch list. We've got euro yen, pound yen, dollar yen, a lot of these where I'm looking for trend continuation setups. Not so much necessarily with the Aussie yen and Kiwi yen, unless of course they do decide this week this week to kind of pick up a little bit and become strengthen a little bit. We'll see. But for the most part, looking at some of those yen pairs to see if there's any re-entry opportunities on this. Sometimes when it's so obvious this is a break and a retest of resistance, finding support, it's such an easy, obvious setup, then I might reduce my risk on that, because sometimes when the setup is so obvious, it just falls apart because so many people kind of take on it. It's too obvious. But that is the idea here, looking for a pullback and a setup over there. And of course, there's always murmurs of intervention by the Bank of Japan, so I want to be a little bit cautious about those. Okay, moving on, have a look at gold. So gold has continued to kind of drip below. It's still sitting within this monthly area where I'm potentially expecting it to turn around. Right now, it's below that 1900 level. So right now, I'm expecting this to continue down to 1875. If it does manage to reverse this week on, we get a weaker dollar, then this level still holds potentially. But for now, that's my expectation, is to look for shorter term shorting opportunities. But my longer term, I'm expecting this to reverse in this area for now. Silver is also trying to turn around where it is here. You see, you've got a little bit of a bullish doji or spinning top candle, looking for that potential swing low if it's going to stay above that 50-period moving average. Then we have a look at crude oils. Crude oils actually finished relatively strong just on the last couple of days of the week, but they have started that swing high, and so the question now is, will they be able to turn around? So I'd be looking for, again, I'd be looking for breaks through this. I don't like this area. We're too close to trade it up here to take some profit. I'd rather it broke through that before I went long, and otherwise there's still a possibility of it having some correction to the downside. If you look at Brent crude as well, you've got the wicks here. There's lots of buyers below here. They're propping it up. Not enough to keep pushing it through. So day traders will potentially just wait for it to keep and break above those, or follow it up to here, then potentially wait for it to break and push a little bit further. Let's have a look at the global indices. So we had a deeper correction this week, coming back into this level. This is a good area for it to potentially find support in at the old highs. It's also still within the 10 and 20 moving averages on the weekly. Just noting this behavior here, that last time it got to this level, it had a bit of a reaction there. So is it possible it could come down as far as this other monthly level here? It is possible, but the weekly structure looks really good. We've got really nice high lows, high highs. This is a great area for it to see if it can find some support. It's overextended to the downside. So this is what my plan is to see if we find support here and recover this coming week, so we get a nice green candle here. Failing that, it'll be the week after. All right, so it's just one of those things you're going to have to wait and see, because it sits at a fork in the road on that particular level. Here's a really nice correction. Very nice for it to even come down here, potentially tap this level, and then finish as a green candle this coming week. On the monthly as well, you could see it could come down to 4331, or potentially just break down towards that level. It's possible, moves down can be bigger, but this is also a very good area for it to recover. So let's see if that's going to be the case. NASDAQ is the one that's had the biggest move going back all the way to January, and a correction down here would really make a lot of sense. So remember, we get a very nice healthy correction when we do that. If we use, for example, a fib level, and we just measure from the swing low up to the swing high, that would bring us back down towards a 382. So it means we'd have a move down, but we could finish very strong based off, I don't know, something that comes out of Jackson Hole, something that it prefers to do that. That would be a really nice setup. So let's talk about the kind of potential here. Yes, we have a move down. Potentially we finished with a very strong rejection of those lows, a nice green candle in this area. All of that makes perfect sense if that's going to be the case. Alternatively, even where it is, could potentially set up with a bullish candle this coming week. Okay, Russell's also had a good correction back down towards this level. Let's look at the FTSE. FTSE is also already in a good place. So the FTSE, to me, looking a little bit weaker. We've got lower highs coming into this flat level here. So if it's got to recover, this to me would be a very important place for it to do it. If it falls through here, we could see this move as far as 6,700 potentially. So 7,000 is a big line in the sand for the FTSE, historically speaking. If we fall below that, I think things get a little bit more serious or dire. And these are lower highs, and the MACD is bearish. Okay, so I'd need to see this turn around right where it is now to have any kind of a faith that it's going to recover. So let's see if that's going to be the case this coming week. Then we've got DAX. DAX, I was talking here about this bearish divergence. You can see, just generally speaking, the MACD has been trending lower. So one of the ways in which this can resolve itself is if we just get range bound for a while. So it consolidates for a while, then we see the MACD start to flatten out, and then eventually gets bullish, and we break out to the upside. Alternatively, we see a bit of a deeper correction down to 15,000, or down towards this next level, down towards these previous highs. And so there are some concerns about this potentially being a bit of a double top at this time. Remember that a double top usually means a bigger correction, but if we had a higher low, so we have a correction down here and a higher low, then the picture changes and it becomes a breakout pattern to the upside. ASX out of Australia, so that was a bit, again, that's a miniature double top there. We got a little bit sort of a tweezer effect here, so that usually means we correct. Again, could we have a correction back down to the next level down? I mean, here we are range bound, it is ping-ponging up and down. You know, we could potentially have that. But the idea is that if we are ultimately going to be in a bull market, if we are seeing some improvements, then it's statistically more likely we will see the markets recover from where they are. Nikkei as well has broken through this level, but that's fine because this actually makes sense. When you look at it, it's had a really good run from breaking outside of this range here. It's now doing a retracement, and again, another bit of a week down. So a lot of these charts are hinting at a fair possibility for a week down. Okay, in other words, one more level down. We'll have to see if that's going to be the case. Apple. So Apple's had a very nice correction. You can see here it's back down into this area. This is a good area for it to produce a nice bullish candle. So let's see if that is the case there. It's a good area for it to turn around. Amazon is still doing fine. Still a little bit of an area of support resistance here, but it's not that overextended, I don't think. It's only moved down. Test support should be on paper at least, a shallower correction. AT&T looking weak, still continues to push low, but this isn't really a strong rejection of those lows. We would have to see it turn around where it is now. It would have to, excuse me, start to break above these highs. We'll see if that's going to be the case. Glencore back down, still within this range, by the way, so it should find support in this area. Again, within the bigger picture, if we start to break through the lows of these ranges, like PayPal is one of those ones as well, it just keeps breaking lower. You can see here it's just testing the lows continually. So we'll see if that's going to be the case. It's very similar to that. So I was on Apple, I looked at Amazon, we looked at AT&T pushing, testing those lows. Now let's look at ARC Innovation. ARC Innovation has done a very solid correction down here. This is a good area for it to find some support if it's ultimately going to reverse from where it is here. ARC does really seem to be battling at the moment, and it's heavily overextended to the downside. This is an incredibly long downward move without any kind of a breather. So possibly this week we could see a breather there. As I said, Glencore sitting at the bottom of its range, good place for it to find some support. Tesco, I put the arrow there to see if we're going to find some support and push up from here because we had a little bit of a green candle last week. Nothing just yet, but that is a very nice bullish engulfing bar. And if I just add a little bit of a level here, we've got some bullish divergence. So there's a possibility it could push up from here. Amex, overall, still range bound within this. So this is interesting to me that we have quite a few of these charts, including indices, that are sort of range bound in some ways on the monthly. Berkshire Hathaway battling with this level, but overall not expecting it to be for a correction down here. I'd be very happy with us to have a correction down to 346. Coca-Cola, also just look at that mess. It's really got to work its way out. There's not much I expect from this at this time to just try and climb higher, but if they're range bound, they're just going to ping pong around. Same thing here as well. BP just stay in this area. So it's tied very much to crude oil. I say this every week. Exxon as well. Exxon's performing, relatively speaking, better. It's broken outside of this range. That was a nice breakup bar. It should continue up from here. But again, joined at the hips to crude oils, so they often are very much influenced by that. And we've got General Motors also range bound here, back at the bottom of the lows, and a big move down, a big drop down. It's overextended. Can it work its way up from here? Let's see if that's going to bounce back from those levels. Morgan Chase, it's an inside bearish candle. Again, I would expect at most a correction down towards these old highs here, possibly down to 140, but it doesn't look heavily overextended. It looks like a normal, relatively normal correction. And here we've got we actually had a bullish candle here on Adidas, so that's nice. It's just choppy as it in this area where it is, but it should keep climbing there. We've got Meta. Meta's overdue, I think, for a really nice correction down to 245. So will we have that this week? We'll see. Remember that when something like Meta has a big correction, that impacts obviously the NASDAQ because those are the bigger companies. But it doesn't necessarily mean it impacts the smaller constituents. Okay, so just when there's a big drop on the NASDAQ, that could be a move on any one of the big five on the bigger ones. Okay. All right, so Morgan Stanley range bound here. You could see. Let me mark it so that we could see the range here. So it makes a little bit more sense. Much easier to just do that. So it reminds us that we're in a bit of a range there. We've got NVIDIA. NVIDIA, again, overextended. It's still this is actually trying to keep going from here. That's still a level of resistance. So if it does manage to break the high here, then the next battle is going to be this 468 level, if it can get past that. Otherwise, again, it would really be in NVIDIA's best interest to have a deeper correction down towards 336. From there, it would pick up a lot more buyers. There's a lot of people that want to get in. They just need it to get a little bit cheaper before they do. And again, here, a correction down to 375. But this area is really good for Netflix to recover and turn around. PayPal, we've already had a look at, just testing those lows. It's really struggling a little bit. I get a lot more emails from PayPal in my inbox now as well. Peter Lynch, who's done one up on Wall Street, he was always saying, look, if you really like a product or use a product, then you should, and people are using it, and people like the product, you should buy its stock. That was like one of his, streetwise kind of criteria. Okay, so a bit of a correction down here. Also, very much, the angle of this is quite ridiculous for that. It doesn't really bode well. It's a very negative reaction from that sharp move up and a sharp move down. But overall, I would still expect this to, if it does come down a little bit further down towards 120, if it's going to do that, we've got the spider as well. Also, largely range bound. Again, I think it's better that I mark these here because they just helps remind us that it's stuck within that range. And the behavior is different in a range. FedEx, okay, interesting. Tesla, what's happening here? Okay, not really sure. There might be a server issue connection because it's the weekend. So again, FedEx is doing a very, very small correction over here. It needs to accelerate. I'd love to see this come down to 250. It's had a really good move. It's doing very well. And just any kind of a correction down to 250 would be a really good base for support, but it's treading water. It's looking a little bit sort of weaker. We'll see if that's going to be the case, but not expecting much of a move there. All right, Tesla. So Tesla's, the danger zone for me is when it's coming back into this downward trend line. So on the weekly, let's just have a look at that full screen. We've got this sort of trend line sloping up here. This is an area where if we start to dip below that, then I start to become less optimistic about Tesla's future, like cautiously pessimistic, let's put it that way. I'd like to find some support in this area, then break to the upside. It did breach it over there. Breaching a trend line doesn't really count until there's follow through. Okay, so that's why trend lines can be very unreliable. They're just good as a really good line in the sand. This is a good area of resistance. See if we can find some support this week. Let's have a look at Vanguard as well. Also here, a nice correction. It's done most of that correction. It's a great area for it to find some support if it's going to do it, recover where it is now. I added Walt Disney to the list. I just want to have a look at that. And the reason for that, again, for those of you who are new, is that overall this looks particularly bearish, and it is a significant level given the entire history of Disney. This is a bearish kind of a pattern. Looks like it's going to break out. And I think it's very significant. It's sitting at lows of where it is in 2014. And is it to do with the streaming wars? Are we seeing something happen? What's going on? But yeah, that is looking more and more bearish at this time. Okay, so interesting to see if it can recover from this level. In most situations, if it was any kind of instrument, it would ultimately break through, but sometimes they can recover, so we'll see if that's going to be the case. Let's have a look at the 10-year T-note as well. You can see that continues to sell, so still not getting too much love over there. The Eurobond. Also, let's have a look if it's recovered. Also trying desperately to turn around here. If I mark this as a possible level of support, you can see it's trying to turn around where it is here. But overall, also continuing to look more and more bearish. We'll see. We need to really come up and break these highs here for it to turn around. And then we've got cryptos. So we'll wrap up our cryptos here. They had a big move this week. Happened very, very quickly. Happened on a few of the others as well. So at least what they have done is broken out of this melee. Just not sure what they wanted to do. So come down and test the support. And let's see if it can then recover from that as well. Okay, so we've got Solana. You can see all of them have just broken, at least certainly from the big two, the Bitcoin and Ethereum. Quite a few of them had a big move out. So the main thing is that they've broken out of whatever kind of a coma they were in, and we'll see if they can recover from here at this time. But again, most of the markets here are still showing their potential for a little bit more red this week, but it could start out red and finish up green. That can happen. In fact, that's the kind of thing that does happen. So let's see how the market responds. This is a good week for it to recover. Failing that, it'll be next week when we get a second leg down to those other levels. So know that it's a question of which level does it find support at. Do I think it's going to find support at one of those two levels? Yes, I do. At this time, there's no evidence to indicate that that wouldn't be the case. All right, so I'm going to leave you with that, but thank you very much, and have a great week. Trade cautiously and sensibly. Thank you.